In this video of implementing market structure lectures, we're going to actually talk about you sticking with your routine, you sticking with your trading plan. Like, hopefully by now, you're going to start to build a rough idea. You'd have went and had some demos, you'd have went and back tested some things we have talked about in this course, and by now you'll have a rough idea of how you actually want to trade, and you're going to start putting together a little trading plan, not a full one essentially, but just little things you want to consider when you are trading, whether you want to trade some levels, whether you want to trade the market structure breaks. It's important you do start to think about those things and you actually suit them to your own needs, and you suit your strategy to yourself so it works with you. You don't work against it, you work with it, because that's going to be very, very important. So first thing you'll have to consider is actually creating daily routines to identify zones where you want to do business and actually sticking with those zones. So I'll go through my routine in a minute, but what I want to stress first and foremost is you need to be accountable for what you do, because if you're not accountable, you always have something else to blame, or you just won't take full credit for the things you do, or you won't take full responsibility for the things that do go wrong. So let's say I put a trade into the group which I'm looking at, and I'll say I'm looking at this area, I want to trade off this area, and you just simply go and copy it. If that trade goes to a winner, you'll be over the moon and be like, yes, I traded this, I made 2 on this trade, amazing. If that trade goes, like, it'll be a loser, and this is something we'll talk about in the psychology lectures furthermore. If this trade is a loser, you're going to feel like, oh, it's a loser, but it's all right, because it wasn't my trade, it was Chris's trade, so it's not that bad, I don't need to do this. When you start to create daily routines, you realize you become more accountable, as well as you become more technical with your approach. You don't let your emotions get in the way as much as you not think, oh, this is a good level in the market, it might be good to trade off from. You come into the day and you specifically say, okay, I want to trade from this area, and this is what I'm going to do going into the day. So as a quick example, let's say it's the 3rd of June, and it's the 4th of June, you come to the morning of 4th of June, I'm going to leave the market there, and you think, okay, where is the liquidity in this market? So first and foremost, you're going to look at what's happened in the past 2 weeks, essentially. 2 weeks. This low that's been creating the market on the 3rd of June, I stuck out this low, all these lows up here as well. So first thing to me is there must be a strong move to the upside brewing around here. We might see a massive pop to the upside, simply because we have took out all these lows for the last 2 weeks. So for me, naturally, I'm like already thinking, okay, I'm going to looking for longs here, whether that's off a smaller time frame level, whether that's off a market structure break to the upside. Instantly, I'm coming to the market thinking, okay, this is my buys for the day is going to be long, because I've seen all these lows broken up here. Same thing would have happened, like, let's say, coming into this day here, and the high has been broken there. Maybe there's going to be a move to the other side of this range. You need to consider what you actually want to act upon in the day. It's really important. You either write these out the day before or first thing in the morning, so you can look back into it, because I've found personally the first few things I write in the morning are the most important to me, because I might go off and my market, the view of my markets might change, my market bias might change throughout the day. Yet when I come in with a fresh set of eyes in the morning and actually look at the markets first thing, what I see and the areas I pick up to trade from tend to be the best areas. So it's very important you do create like accountability. Even if, let's say, you've got a notepad in front of me, that's what I'll do. So I'll go into my own daily routine. So when I come in the morning, 6:30, I'll sit in front of my setup and I look through the pairs I trade. The first thing I'm going to do is actually go on the daily time frame and look for any daily biases. Not me to do that. Look for any daily biases. So in this particular example, I don't have a clear daily bias, apart from the fact that we have actually took out these lows. So we took out the low from the 19th. So I'm potentially going to be looking at any longs in the market. Maybe not shoot for this high here, but potentially shoot for this high there. So I'm just going to, when I come to the market, I'm going to start to evaluate my daily bias. So we went through the daily bias and understanding market structure. So what you found works successfully for you, and whether that's bullish, like that this is actually a bearish engulfing to the downside. So we might see a move. So within a few days time, we might see the move to the downside. However, for me personally, I know like we have come and took out these lows in the market, but with such force that we came down, we will have some mean reversion where the market is likely to trade going into, so this is the 3rd of June, going to the 4th of June, the market is likely to actually come up here first before it moves down, because it needs to give back some of that massive move it gave away. So yeah, so when I come to the market, the first thing I do is I look at my daily bias and I look at D1. I'll spend 10 to 20 minutes looking for the pairs. We don't trade many pairs at all, but it's important to actually do consider my daily bias for the day. And I'll write it down. So I'll write down GU daily bias to the upside. So then when I go into my day, I know whatever time of day it is, I'm looking for the longs in the market. And I'm looking for these lower time frames to align with these high time frames so I can have a successful trade. After that, I'd go down on the 15-minute, let's say. And this is actually what I marked out earlier. And as I said earlier, we have took out liquidity from all these lows. So this is what I'm going to be looking for now. I'm going to be looking for that move to the upside. I'm going to look for the market structure to come here, come down and shoot off again. What I tend to do as well is write down specific levels. So I might write down, okay, let's go back again. Between 141 ones and 141s. So within this area here, mark it out. Within this area here, that's where I'm going to look for my longs on the lower time frames, on the 5 minute or 1 minute. I'm not going to go into them now. But yeah, so this is where I'm going to be looking for those longs. And this is my bias for the day. It's important you write it down, as I said, because when you have something written down, it might sound silly, but you are more accountable for it. You realize you start calling like some moves in the market, which if you didn't write down, you wouldn't have thought back, and you go all day without looking at your diary. Then you look at your diary and you realize, okay, price has to come into this level. I did trade it. Why didn't I do that? I wrote it down. You do might forget. So as long as you write it down, you've got it there in front of you, it will be much easier for you to actually do these trades and go in line with your trading plan. So trading plan, like you'll start to put together the trading plan. You might want to include your daily routines in the trading plan, or that's something you might want to do separately. But it is important you do have those daily routines in place where you identify whether it's key levels, whether it's areas, as I said, these areas of liquidity where stops are likely taken. We are like to see bigger moves. So just as a quick example, I know for a fact this massive move down here will needs price to revert back, because like it took out loads of sellers in the market as of here. So as it's picked up the orders on the way down, there's going to be a lot of buying going to the 4th of June. And coincidentally, 4th of June was actually NFP day when NFP figures came out. Can't remember which way they went. Let's have a look actually. Price action for us to see. So market moved lower, moved higher. Oh, then that's, yeah, so NFP figures came out 1/2, so then the market jumped NFP figures, giving back everything from like which came down here anyway. So I might have looked, if my trading plan allows me to trade certain news types, I might have traded this, but I don't trade NFP myself as it's just too unpredictable. But you need to be aware of all the news that are going on the given day as well. So as I said, if I go down on the daily time frame first and foremost, then I write down what areas I'm looking to trade for. Then I'll go on my lower time frames, looking for those trades, marking out those areas. We went through the OTE concept, so I'd mark out the Asian session. Potentially, I don't do that now because I don't need to. I know where I'm looking for price to go in certain areas. You might want to do that going forward. It's completely up to you. Just find whatever works and stick with it. Send us your ideas as well, where you might find, okay, this works with me, where I draw out my specific levels, and then when price touches that level, I trade off that level with my stop in line with ATR. Just stuff like this. Just find whatever works with you and align yourself with the markets. Don't let the market rule you. Like, align yourself with the market. Also, start to recognize where there are strong news events, and there have been strong news events in the past. So, for example, I knew this was ADP figures coming in. So look, okay, these ADP figures coming in took out all these stops. What's likely to happen next? Try and like not saying predict where the market is going, but try and predict like where you might have a trade. Like, don't, this Dante says this, if I can quote it correctly, don't predict when the market is going. Like, know what you're going to do when the market gets to where you want it to, essentially. So you, like, we leave orders in the market. For example, the market's up here, we might have an order in the market all the way down here, because we know which is 75 pips away from entry, and then we might have a 5 to 10 tick stop sometimes on those orders. We know the market wants to get down there, but in the meantime, if it's not presenting us with that opportunity, we don't need to chase it. We're just going to wait for the market to come in there. But what it comes back to is you have to learn how to sit on your hands, and when you implement these things we have taught you, these strategies, don't go out and chase them. You have to have your specific rules come into play first. When all the rules are ticked, then you go out and enter an order. For example, when you have the OTE, if the market structure has been broken and the Asian session has been broken during the London session, then you're permitted to enter the trade. Plan your trade, trade your plan. That's what always comes back to. You have to establish that accountability for yourself and establish those daily routines, because those daily routines are what's going to get you to that next step